Good morning, good afternoon, everyone. My name is Russ, and as always, it's Friday and the weekly update here on DataDash. Guys, it has been a very important week and a very important week in crypto in particular, with ETF approval for Ethereum coming yesterday that, frankly speaking, I was not expecting to get approved from the first go. We're gonna focus today more on the crypto markets. Being honest with you, I already had an update for silver and the stocks prepared, but then I realized most of the people would like to see what do I do now, where I do transacts. Of course, we're gonna cover a little bit of the macro, the DXY, and of course Bitcoin are still important, but we're also gonna focus today a lot on crypto and in particular Ethereum due to the ETF. So with all that said, let's go. First of all, and foremost, I would love to start with a little bit of a macro because that, as always, provides us a very important outlook for the entire week ahead. And when I am speaking of macro here, it is important to remind you all that the unemployment claims yesterday came in line, came lower than expected. And what it means for us and what it means for crypto and what it means for the risk on assets, it means that the people that are still calling the recession already here, already now, are yet wrong. I'm not saying the recession is not coming any soon. I'm saying that for now, those are the people which are on the weak side. They are jumping out of their pants trying to short the market. I can see it from our Telegram group. I've been asked today, should I short Nvidia? What do you think? I think it's a great idea. I'm honestly not thinking it's a great idea at all because, as I said last time, 3% GDP, 3% inflation, Fed is claiming to be restrictive but is standing right now at 5.25 basis point interest rate. This is not restrictive. To be restrictive, they have to be above 6. So when we have a scenario when the job market is still strong, the unemployment claims come well, and the Fed is not hiking, and it's not cutting either, but it's not hiking, we are yet in the prolonged melt up. And with all that said, I want to emphasize that current setup is bullish for the markets in the short term. Despite all of that, we had the worst Dow Jones closure yesterday in a few years. We had a horrendous engulfing candle on SPY and Nasdaq, and this is also probably worth a couple minutes of attention. But before we dive into the charts, I want to remind you all that Monday is the Memorial Day and the public holiday in the US, so the stock markets will be closed. And that means we're going to have the prolonged weekend, lower liquidity into the markets, and higher than usual volatility. So I encourage everyone to stay safe and to use as little leverage as possible during those extended weekend. So what did we have? We had also, as mentioned, the yesterday's unemployment claim 5,000 less, and today we're gonna have the consumer sentiment. I don't think it's gonna affect the markets a lot because it is way more of the subjective data, not as number driven, not as quantitative, so to say, directly. And then for the upcoming week, actually Monday, as mentioned, is a public holiday. Tuesday and Wednesday, there are only the news and the macro updates for other markets than the US. So basically until Thursday, when the preliminary gross domestic product GDP quarter-over-quarter update is gonna come, not that much is about to happen, and that give the market some breather. When that comes to the charts right now, first of all, I want to outline Nasdaq closed with the horrendous red engulfing bearish candle yesterday. On the other hand side, taking into account how we were overbought, one more time, I don't like that word in particular because in a bullish market, things can stay overbought for weeks. And the same in the bearish market, things can go lower even if they are oversold. However, it still gives the good indication on where I was already expecting the certain correction. People in the comments were asking me about TDI-GM indicator, so maybe a couple minutes explaining how it actually works. The TDI-GM is a free indicator. You can go and put it on TradingView And this indicator provides you the green line RSI that is actually in a certain blue band. Consider it like similar to the Bollinger Band for the price itself. So it gives you an opportunity to see that the acceleration, in which case RSI is representing, the acceleration of a particular price has been changing too fast beyond the statistical probability of it. And this is what we had here, that spike, and now this acceleration starts to go down. We open up with the very green candle and immediately sell off. Two things here. First of all, when we are seeing the candles like that in trading, the flat Mariposa candles, those candles are normally reclaimed. The tops of this candle is very probable to be reclaimed. And it actually also looking at the sentiment on the market and looking how everyone now wants to short everything, I think that these early shorters, those impatient shorters, so to say, they first would be kicked out. And if we really have to go down, something tells me that we might have one more spike, but this spike is not going to happen today, simply from the market psychology. Why it's not going to happen today? Well, think of it yourself. If you're going to have a prolonged weekend of 3 days off and you just want to have the good holiday, have the good time, you're a portfolio manager sitting on a tens or 20 billions of dollars, all you want to do is to keep your amazing year that you had so far, amazing gains. So you're just going to sell off onto this long weekend, because the China and Taiwan is not something you would like to stress over the next 3 days. So we're not going to have a crazy bounce today. I'm actually expecting the very choppy market, and that would be reflected into crypto too. That is why I'm not surprised with the reaction we are currently seeing right now. Everyone yesterday was impatiently expecting Ethereum to immediately go all the way to 4,000 and have a crazy run, but that didn't happen. And it didn't happen for a reason, but we're going to cover Ethereum in a second. For the bull markets, S&P 500 is your point of reference. For the bear markets, Nasdaq is your point of reference. Keep it as a rule of thumb. Write it down on a piece of paper, and that's how you refer. Right now, we are in a bull market, and also for equities, but also for crypto. So this is why you actually need to put a little bit more attention on S&P 500, and in a certain case, though. But let's start charting with the Bitcoin. So what do we see here? We see the clear range. Let me zoom in a little bit. The range is between 59,900, or let's say 60,000, and 72,800. So this is our range. And right now we are trading clearly in the upper part of this range. So the reason is that we are long, and we went long here yesterday between 67,000, 67,500, and we keep our stop loss prior below this low. Why? Because we are expecting Bitcoin to start accepting in the upper band of this range, and in this case, this would be our first bounce to 69,000, 69,500. When I'm actually looking at the coin analyze, I am seeing that those sellers that have been trying to push the price down are not really succeeding. So that's an example of what we discussed 2 weeks ago. As we discussed an absorption, I was just looking for a picture here to remind to those who was not seeing my video from 2 weeks ago. There are two types. There are two types of the setups that you can play with between the price and cumulative volume delta, exhaustion and absorption. And I'm seeing right now in the chart that type of absorption where independently of how much of the sell-off is taking place here on spot, but also on the red line on the derivatives, the price is still holding this low. And for that reason, coming back to the charts, we are playing the upper half of the range. It's very simple. But as soon as we start accepting below here and we start bleeding like that, like that, like that, like that, I'm very happy to cut my position at a very small loss and start adding at the first level of 63.2 and the second level, if given, not sure, of $60,000. And in this case, we're gonna have way better entries because I still think that this high and most importantly, This high of nearly 74,000 has to be taken at some point, especially if we have to come back. And this is the reason why I am still bullish on Bitcoin, and I'm looking for better bids into the second half of the year. That also is aligned with my macroeconomical view that I just shared 5 minutes ago. When it comes to Ethereum itself, I was already warning you on Wednesday that ETH to BTC is quite overextended, and that would be normal to have a certain form of a pullback here. But as soon as we are holding our 5.3 or 0053 level, this is nothing to worry about, because this is going to be just a retest and acceptance into the higher range. That's why I always also remind you guys, we need to trade the ranges, not the diagonal lines. Diagonal line is a meme line. It's great to have certain momentum traders chasing those breakouts, but the liquidity in the order books is always sitting horizontally. So that's why you can never take diagonal lines with the same level of relevance as you are doing with the support, resistance, supply or demand, whatever the word you're using, buy side, sell side liquidity. There are multiple concepts, but the idea is still the same. What I am particularly seeing and what I am interested in is this coin analyze chart for Ethereum. And here I'm actually seeing that this yesterday liquidation week has wiped out a huge amount of open interest, bringing us back to the pre-ETF hype levels. And then we had even higher OI open interest squeeze and liquidation. So right now, that's quite healthy. There is not so much of open interest on both sides. Why? Because the market maker clearly wiped both sides of the game. So both over leverage longers and shorters have been liquidated. But actually, this is quite healthy, taking into account that the spot is still at the levels where it was. The spot is not selling with the price going down. The spot is actually holding. The only sell-off and those recent drop has been purely perpetuals driven. And that actually gives me an idea. And now my idea is following. If I'm going to open Ethereum chart purely, I want to see more bids into that level. We already got filled. I'm going to show you our Telegram group. So we got filled at the levels I indicated. The levels are here, and between 3,440, 3,640, we start having certain bids fills. That's the lines from Wednesday. Nothing changed. We are still within the same game plan. When it comes to yesterday's play, that of course has been quite a different weeks on different exchanges. But if you look here on spot, 3,534, and this is my fill shared with the Telegram group. So I got filled around 3,538. Well, we even had the colleague who got filled at 3,537. So $1 below me. I made a joke that he front-runned me. But yeah, the point is simple, guys. I think that we still need to come back and to recover this week. Why? Because first of all, this week is quite different across exchanges. We have like this level on Kraken, we have slightly below on Bybit, we have slightly above on Binance. So normally when there is such a huge discrepancy across exchanges, market makers tend to slow bleed into there and to recap this liquidity. And that also gonna align with those yellow lines that I just presented to you. And let's see once again where that can bring us over the weekend. Everything here, in my opinion, is an amazing bid opportunity. So I'm gonna stack way more bids. They're already there, but I'm gonna add the size between that level and that level. Once again, for those who are watching from mobile phone, you don't see those levels, 3,450, 3,650. You can use TLRY to do that with a higher degree of efficiency. You can basically create automated 10 or 20 orders in here and in other altcoins that you would like to bid. And what are those other altcoins? Let's of course go into the charts and have a look. On top of that, we had 2 altcoin trades running from last Friday. Let's have a short look how they were doing. First was Solana,
And it comes to Solana, extremely bullish market structure. As you can see, we have already printed those higher highs. And moreover, what's super important for me, and that's the reason I was waiting to go long. As a value investor, you would say, oh, I want to go long as cheap as possible and then sit on my trade for years. As the trader, I am operating in a different mindset. I'd like to the supply, first of all, to be resolved, and Solana to accept in the previous range, and then I know I am in the previous range low, so my target would be at least $200 to the range high, and that's where I'd...
That is exactly what we had on Solana. Coming to the charts right now, we had this amazing run from acceptance into the upper band from this consolidation. 17% from there. We did not hit the target of 200. We were shy, $10 shy away from there. But I was also indicating that's fine to take profits because we were seemingly overextended on hourly and 4-hourly time frames. And for those, you don't actually need my advice if you can TP or not, because you can simply go to TDI GM indicator, as I was just showing you a few minutes back, and see that we start to touch the upper band here or getting overextended. There's always a nice opportunity to take profit and to add a little bit more on the retrace. So when it comes to Solana right now, we have 3 most important levels. Let's look at them. Let's have the chart a little bit cleaner from here. So this is just quite straightforward. The first level, 158. I am not 100% sure we're gonna get there, but it might happen over the weekend. And that's where I would like to bid on my prolonged way to $200. prolonged rally. The second level is where we are transacting right now. It's 165. So far, we're gonna hold it. I think we are holding it quite well. The zone of resistance, let's highlight it maybe with the red rectangle. The zone of resistance is here, and we are able to go through this fair value gap or the zone of supply and resistance. We are clearly at this 180 level. Once 180 is reclaimed, 200 next. Just trade it level by level. There's no need to overcomplicate it. Like very often people are telling me, oh, but tell me what's going to happen. If you don't know, you're a bad trader. No, the TA is not about predicting the markets. No one going to know what's going to happen in the market. It's just enough to have one tweet with the China escalation in Taiwan, and all this TA would go nowhere. But what TA is about understanding the levels of transactions and the reaction on those levels. That's where TA is extremely helpful. That's the first thing. The second thing, there are also majority of people are unfortunately forgetting that 90%, 95% people down there, they know TA super well. They have a bunch of paid indicators, not paid indicators, whatever works for them, but they are still not consistently making money. There are less than 10% of people in the market who can do the money in any market. Of course, where everything is up only, there is amazing, and your taxi driver is telling you which kind of crypto he buys. When the market is choppy and complicated, it's not actually so easy. And that's why out of 95% of the people who actually are quite good in TA, studying it for years, they're 10% are making money. So what's the difference? What's the crucial factor? I keep reminding you guys, it's all about inner mastery. It's all about psychology. And we're going to have a specially dedicated video on that, but it's very important. And I'm reminding you once again, let your winners run and cut the losers early. And that's the huge mistake that I see all over every time. People with the hodl mentality, they think everything is 90% down from its all-time high, it can't go lower, and then they sit and bleed for years. Instead of that, I encourage you to draw your zones, draw your lines, draw your consolidation ranges, and once we're out of this consolidation range, that's where you are interested. Let the market resolve the pain itself. And for today, the sponsor of our video when it comes to trading and taking profit is I Trust Capital. I Trust Capital is something that allows you to take advantage of all these micro trades, and not just on crypto, as well on stocks, as well on silver and gold, that are actually trading 24/7. And these service allows you to move your IRA or Roth IRA or 401k account and take advantage of the power of compounding, because when you are able to not pay the tax from every short-term trade you do, over the long run, your curve, your P&L curve, it's gonna look completely different. They have no monthly fees, no hidden subscription fees whatsoever. And moreover, for DataDash users, link is in the description below. While signing up, you will get a welcome bonus. So that's something to consider if you actually want to trade, actively trade, and aggressively take profits. I've just showed you on the example with Solana how quickly we can get 20% in a matter of 2 days, and then we're going to retrace back to the level where we were. That's up to you to decide if you want to take those 20% or not. I personally do. That's why my P&L curve is at all-time high. And for someone who is holding, obviously Solana is not yet at an all-time high, so, and that was painful in a long road. That's absolutely up to you. When it comes to our second altcoin trade from last week, it was actually API 3 following the link run and the Oracle narrative. So let's have a quick look. How did it go back then?
We accept above that range, and I think we have a good candidate for that. So I just showed you CRV that has no strengths, and now I'm seeing API 3 that's already on the top of the range. What I'm going to do here, I'm also going to go to Coin Analyze, and I'm going to see what I see. The negative funding, people start to short here.
So that has been playing out quite well, 17% from there. And we took the profit when it also started getting overextended, and we're going to get into those slightly lower. I am actually feeling that can be a good opportunity to add. Let's have a look. I would not jump into it right now, but you can place a few bits between 2.52 and the closure, so the lower of today, 2.68. So that zone should provide you a bounce. And if not, then you just cut here immediately. That's why you place a few bits into that zone, and you just simply see if you start to accept in the previous range, then you're not interested into that. If this range high, value area high, is holding as a support, then surely we have this fair value gap and we can continue to keep covering it. But on the other hand side, also keep in mind that we covered already more than half of it. So maybe it's not the most high probability trade, and it's okay already with 17%, and we move on. So now let's have a look into something I guess way more of you will be interested at. In this case, it's Avalanche. Those 3 levels make the play quite easy. 37. That's what we hold right now. Hold here, bounce back, start accepting above 39.2. Then the road is clean to 46.3. A very, very nice trade. Very good risk reward. This fair value gap here. A lot of alts, they look quite the same. I think we still need to get the liquidity from there. Everyone started to short based on the news. Obviously, this is something that has been geopolitically related. So a lot of late shorts that stepped into there, meaning market maker had to go long. Market maker is currently at a loss. Market makers do not like that. So the market maker would come and recap this liquidity here. Now, I think there's a good opportunity to also answer some of your questions, and I received a lot of questions regarding psychedelics. And when it comes to Tilray, what I actually like to see on this chart is the fact that the volume has been declining on the sell-off. And I like to see those sell-offs because on one hand side, we are recapping the liquidity. We are coming back to the order block. So again, this news-driven pump based on Biden signing up a certain document and so on and so forth. Of course, a lot of people see information on Twitter. On Twitter, they don't really read what is it about. They just see the ticker on the news line. They go and buy. But market maker, as I explained just a second ago, that's not favoring him. So he'd like to come back to the order block and to recalibrate his positions. And that's why the sell-off has been here. It's not really sustainable because the volume has been declining. So I would expect normally a bounce from here, and this bounce even can come and cover that gap. And this gap, we're talking about 254, 258. So we're gonna be speaking about like 40, at least 40% from here, and your stop loss is quite low. I would honestly, with how choppy the market is, I would not really like to engage right now into large position in psychedelics. But if you're already in, there is no need to panic and sell. I'm just giving you the game plan of how I would actually play it from here. I would even potentially slightly add into your position, especially if you've been holding from here, from the highs. And yeah, it's a good risk reward play. There's no need to panic forever, for sure. But it's like also no need to hold it forever. That's what I wanted to say. You know, if you start seeing that this order block is not holding and we start accepting below those lows, I slightly extended the stop loss. I mean, 4.5 at the risk reward is a very good, is a very, very high risk reward as well. Anything above 3 is already like very good. And if the win probability is above 50-60%, that's a plus setup for me. So I'm not sure the probability here is going to be incredibly high, but the risk reward is not so bad. So yeah, I would give it a try, but I would not engage into psychedelics if you're completely not in. I think we will have the better moments with overall the market correcting. And maybe a very short update as well when it comes to silver. I was indicating in the group 32 would be the zone to correct, but looking at SILJ to silver, meaning the relative strength of the miners, it is quite clear and indicative that we are not yet on the top of this ride. I will still have a certain focus on here. Normally in the commodities market, there's a bunch of fake breakouts. Or fake breakdowns in these cases. So yeah, I believe we need to wait until Tuesday because Monday's a day off, as I mentioned, and see how we start getting close here. But also keep in mind, SILG, it's the ETF that is actually combining majors, large miners that dilute their shares, and that's already at like $5-7 billion market cap. The small place that we actually have entered, for example, the Kidney Silver. Let's have a look how strong it is holding. It's holding in its uptrend and it wants to go higher despite the stochastic curling down, despite other oscillators that you might say, oh, but you know, it points that we have to go down. But it's not really rushing to go down, and it's the reason for those is that fundamentally all those stocks would be at 3-4x from here in a matter of time, and the smart market participants are actually aware about that, and it's not everyone who wants to micromanage their trade for 5% up and down, being afraid and being aware of being afraid to lose the potential 200-300% gains. So if you're not like a pro trader, or if you don't feel super confident, I would not run out of your trades here. I would actually hold, and I have way more conviction into those plays than I would have in the alts from here, simply due to the macroeconomical environment. Whatever the scenario we're going to take, is it going to be stagflation? Is it going to be recession? Is it going to be the Goldilocks and the prolonged rally and up only from here? Those are the plays that's going to benefit in all three scenarios, while alts can benefit only in one of those particular scenarios. So that's also very important to keep in mind. Guys, with all that said, if you want me to chart more alts, let me know in the comment section down below. I'll keep 1 or 2 alts for next week. I know a lot of you have been interested in Polkadot or in Atom. Let's have a quick look. Okay, let's have a last quick look down there and what I see. And what I see, let's take for example CRV, Atom, and DOT and compare them. They kind of look the same, but not actually the same, because on one hand side they all are trading still chopping in this range. This horizontal range, and on top of everything, obviously CRV is probably going to be much more benefiting from the Ethereum ETF narrative, and this is why it started accepting already, trying to at least accept above the upper value area high of that range, or upper band of this range, and resolve the level of supply that we have here around 47 cents. I gave you those on last Friday, where we were just at 42 cents. So you know, we like 12-13% from here, but this is pretty much nothing. If we accept, then we have this huge fair value gap, and I think we can do something like that. And in this case, it would give us provisionally from here another like 23-24%. So obviously other L0s, or how to position themselves, or L1s, are not benefiting that much from Ethereum narrative. And so, for example, when it comes to DOT, I'm not so interested to be like chopped in the middle of the range, because keep in mind, and please don't forget, there are some capitulations that are taken by price. Some capitulations are actually happening through the time. So we can easily chop here for who knows how much, maybe until August. And I'm not interested to have my capital, you know, simply being allocated somewhere where it's very much indecisive. I'd rather be entering somewhere where we are close to the range low, like in this case, Atom would provide me an opportunity to have a very tight invalidation, which of course I'm concerned about all these weeks. I'd like them to be swiped. So maybe it's just one tweet or one geopolitical event on this low volatility weekend. Please don't forget, that's the sad reality of the market we are in. If market maker wants to bring the price up, and all of those longers that have actually been lucky to long the week, they're not needed to them. then for sure it just takes a couple of paid influencers and a couple of news agencies to come up with a certain, mistaken tweet, the intern of a certain company that will be deleted in 20 minutes with an apology, but market can wipe up hundreds of millions of dollars without you even noticing what has happened. Or we also can have like pretty much a real geopolitical related event with China announcing a certain intentions around Taiwan and so on. So of course, like nothing comes completely unrelated, but in my case, I'd rather beat something between 7.2 to 7.6, which is going to be like a reclaim of the bottom of this week, rather than instead of entering just right now. DOT, I want it to actually do the job and resolve itself and start accepting here. Then I'm interested to long it to here. And CRE, as I said, I think this is potentially a nice opportunity if you start accepting here to turn it into a good long. With all that said, guys, I give you a lot of alpha today, so please help the YouTube algorithm. So give me a like or give me a comment, share the video with a friend, and I try to cover as much as I can. But of course, there's a certain time limitation. I know it's very hard to watch the videos above half an hour. So with all that said, I wish you an amazing long weekend. Please touch the grass, spend the time with your family. Love you all, and see you soon.